Hello everyone. Today I am going to provide you with an overview of MCX crude oil positional technical outlook for the period 22nd of August to 26th of August and thereafter. Prior to that, I would like to give and take the reference of a previous week report that what was our view which we have shared last week, how things have panned out, and from here on how we are expecting crude oil to move. So this was the report. This was the chart which we have shared as on week 16th of August. Crude oil was trading at 7359 levels, and we have mentioned that the bias on crude oil is buy on dip and sell on rise. As we can see here on the charts, this green line trend line support was at around 7,000 mark, which have been taken. The bulls have been witnessing buying interest from these levels since March 2022. So, as per the technical studies and indicators, we continued to hold the same outlook that crude oil, which is in a consolidation phase, is witnessing buying interest at around 7,000 and lower levels. So that level can be looked for buying. But on the flip side, we will be expecting selling pressure on any pullbacks. So with the same outlook was shared that the counter is trading in oversold zone. From sub 7,000 levels, it can witness a pullback towards 7,600 and higher levels, which can be looked for fresh trading short bets. So buy on dip and sell on rise was the outlook which we have shared last week. Now how things have panned out between 16th and 19th of August, then we see that initially because 15th of August, which was Monday, the markets were closed. So on Tuesday, crude oil opened with a big gap down and it made low of around 69.36 levels before bouncing back. In line with the view, crude oil from sub 7,000 mark witnessed buying interest and it made the high of 75.05 before ending last week at 72.31 levels, down 1.36%. So our view was in line with how the things have panned out. Initially, we have mentioned that once again 7,000 should be looked for buying, and a pullback towards 7,600 odd levels was expected. The counter made the high of 75.05 before ending the week in red at 7231. Now going forward for the coming week, for the period 22nd of August to 26th of August, we still continue to hold the same outlook that this counter can be looked for buy on dips sub 7,000 mark. Long strategies can be initiated expecting a pullback towards 7,600 and higher levels. And as mentioned, higher levels is expected to witness fresh selling pressure. So for the coming week as a whole, we believe that the major support, positional support for crude oil will be at 6,500 levels. So dip towards 6,800 to 6,500 levels can be looked for initiating long strategies. On the flip side, sustaining over and above 7,600 mark, it can even attempt towards the highs of 8,000 and higher, which can be looked for contra trading short bets. So the bias continues to be ranged to buy to up over and above 6,500 mark, and a broad base range consolidation can be expected where one can look for some kind of bullish strategy with a premium dilution also. In respect to the strategies, we held the same positional strategies which we have initiated on 3rd of August. So as on 3rd of August, when crude oil was trading at 7,447 levels, we have initiated a bear spread with limited downside. So there we had the view that the bias will be ranged to down, but downside there will be a buying interest which can witness some pullbacks. So what we have done is we have bought 7,600 put, we have sold 7,200 put, and we have also sold 6,800 put. That means against one lot of buying put, we have sold 2 lots of out of money puts. The bias was simple that though the bias is down, but from the lower end, pullbacks will be there. That was the reason why we have sold 7,200 put. At the same time, we have sold 6,800 put. And this strategy was for the expiry of 17th of August, which happened last week. As per the payoff diagram, we can clearly see that any closing below 7,200 mark would have given the maximum profit of 33,000 rupees per lot, and the risk was around 6,900 per lot. So last week, as on 17th of August, crude oil gave us the maximum profit of 33,100 per lot, and this strategy exited on 17th of August at the maximum profit. Apart from that, we have also initiated another strategy on the same day, 3rd of August, and it was natural gas expiring on 24th of August. So there, natural gas was trading at 622, and we had the outlook that the downside is limited, cap, and there can be a pullback. And that was the reason what we have initiated. We have sold 700 put, and we have hedged it by buying 620 put, expecting natural gas to expire over and above 700 levels by 24th of August. And as per the payoff diagram, we can see clearly that the maximum risk in this strategy was around 33,750 per lot. On the flip side, the maximum gain was at around 66,000 per lot, and that this was possible only when natural gas closes over and above 700 mark. As per the last expiry, that is on Friday, as per the rates, this strategy was in profit of 54,000 odd levels per lot. So both the strategies positionally which we have initiated as on 3rd of August are and has closed in positive territory. If you find this input valuable, then you can contact us on the given mail ID and the contact numbers for future reports and the strategies. It will be a pleasure for us to share the outlook, the reports, and the view for crude oil. Thank you very much for your precious time.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.